what's really happening globally, and it's very, very important at this point in time, especially when the mother market US is now looking at how the incoming US President Donald Trump will be shaping up newer policies, and that is likely to impact the global markets at large. What we've now heard from Donald Trump is that he's vowing for big tariffs on China and on Mexico and on Canada over immigration as well. Those are the things that he has said. He's also mentioned that he will impose 25% tariff on Canada and Mexico until they clamp down on drugs and migrants across the border. He's also outlined an additional 10% tariff above any other additional tariffs on China as well. So his tariff talk is now sooner or gathering pace, and that's something investors really need to know as to how should investors in India back home be looking at that. So far he has not taken India's name, but the trade war he's announced with Mexico, Canada and China right now. How are you really looking at these sentiments to impact Indian markets and Indian economy?
The experience with Mr. Donald Trump is not new. We saw the same behavior somewhere in 2017, 18, and 19 also.
Hmm.
And these steps were already expected. And we knew that the day he gets up, he comes in power, he'll start creating probable trouble for the Chinese economy and the Mexican economy. And that's what is actually happening. So we always believe the fact that the market must have discounted these informations, right? And look at the trend of Dow Jones. Yesterday also it inched up higher and made an all-time high, and the strength is abnormal. This strength might just take index of Dow Jones to as high as 48,000 to 48,500. So I'm still foreseeing the levels of around 10% rally on the index from present level too. Considering
Okay.
that, I don't think there'll be much worry for the index. And as far as the sectors are concerned, I'm very closely monitoring metal sector for this, because if any trouble comes on China because of that, the metal prices may show some good reaction in Indian markets. So I think metal can be the sector to watch out for. But the developments are yet to happen on the price action also. So I'm just waiting for the confirmation.
Right. Apart from this, when it comes to the Indian context, there are again talks about how in Trump 2.0, higher tariffs on even Indian imports could be a possibility. While there has been a post-COVID positive for India because of the supply chain and China plus one theme that has emerged, but with the large labor force growing, the growing manufacturing capabilities, we definitely stand to benefit. But at the same time, export items which could be vulnerable and for us to track will be electronics, pearls and precious stones, pharmaceuticals, even iron, steel, and even autos and textiles is something that one should be watching out for. Apart from this, there is also a discussion, Kunal, on the capital flows as well. With the anticipation of higher tariffs and a reduced trade deficit with China, US may actually experience increased inflation. So consequently, this could lead to higher yields on the US Treasury securities and a stronger US dollar. How do you expect these two particularly to then impact emerging markets like India?
Certainly, the capital outflow we have already seen in Indian markets in last 1 month, and the same is likely to continue going forward. But at the same time, we always believe the fact that there is always one bull market somewhere in the world. Similarly, in case of India right now, there are many pockets which are still underweight. In fact, the valuations are pretty cheap. So considering just keeping these, the main themes like banking sector aside, there are many short opportunities also equally available. And for people like us who are on the fund management side, shorting ideas are very attractive. So the sectors like banking, let's take an example of HDFC Bank for now, because this counter gap up opened
Yes.
today near to all time high. But look at the way
Yes.
it's behaving right now. So these are the pockets where we can focus on, and wherever we realize that the markets are turning negative, we can actually try to find out some shorting opportunities also. But for now, I don't foresee any immediate threat on the markets as far as the Indian markets are concerned.
And okay, what about the crude oil prices and how do they move forward? On the one hand, we have to track the geopolitical tensions that are emerging. So far, with some easing statements coming in, crude oil prices fell sharply this morning, and we did see a reaction coming in into the oil and gas space as well. But it's the OMCs which are actually looking at lower crude oil prices at benefits. Even yesterday, we did see stocks like HPCL, BPCL rallying. Even today, we did see some momentum coming back. How would you really look at upstream versus downstream right now amidst all this volatility in crude?
See, if I just look at the focus, if I just focus on the crude oil prices, since December 2021, crude oil prices have not fallen below 5,500 rupees per barrel. And at the same time, since June 2022, it's consistently making lower highs. That's from 9,000 to 400. Right now, it's at 5,800. So I don't foresee that crude oil will be a trouble for now. The benefit what India can get is the relation with the Russia probably, where we have the chance of getting the crude oil at the lower price, what was promised earlier. So if that continues, I think the crude oil prices will remain largely muted. The levels to watch out will be 5,600 to 6,000 zone. I think this is the only zone which is likely to continue. More pressure on the downward is likely, but upside seems kept as of now at 6,000 levels, which is around 10% from the present levels. Max
Okay.
20% on the higher side.
Okay, got that. So that's as far as some of these how macro issues and of course the Trump trade and tariff talk could actually be important for all the back home domestic investors to really keep a track on right there. But do you also feel this tighter immigration policy could also impact the Indian IT space? Right now we are hoping things would be in the positive zone, but does that have any kind of a negative impact also for the Indian domestic IT sector as well because of the tighter immigration norms?
I foresee that as an opportunity. The only reason being a lot of outsourcing work has already started, right? So the companies are doing a lot of outsourcing work. And so in that case, even if there are tighter norms on the immigration front, I think IT space might outperform going forward because of that reason. So I'm looking
Okay.
at the flip side of the same as an opportunity rather than threat for now.